Good morning, everyone, and welcome. My name is Ryan Berg, and I'm the Director of the Americas Program at CSIS. Thank you for joining us today for a conversation on how electric vehicles are reshaping China's economic relationship with Latin America. Before we begin today's event, let's talk a little bit about the logistics. This morning's event will last approximately 60 minutes. Following the panelists' remarks and a moderated discussion, we will field questions from the audience. Please submit your questions by clicking on the Ask a Live Question button on the event webpage. Please note as well that a live stream discussion will be made available on the event webpage after the conclusion of this event. As the world moves towards cleaner and more sustainable energy sources, Latin America finds itself at the center of a transformative shift. Latin America holds over half of the world's known lithium reserves, and it boasts vast reserves of copper and other critical minerals that are vital in the production of electric vehicles, particularly their batteries. China has emerged as a dominant player in electric vehicle production and, by extension, the global EV supply chain. Recognizing the strategic importance of Latin America's resources, Chinese companies have increased their investments in the region, with a steady stream of announcements in the past years. These investments span from mining operations to refining operations and vehicle assembly, with even some discussion of battery production in various countries. These investments and announcements carry the potential to form deeper partnerships with local governments and companies across the continent. Meanwhile, Chinese exports of electric vehicles to the region are also on the rise. This deepening engagement signals a shift not only in how China views the region, but also how Latin America is positioned in the global economy. Beyond providing access to critical resources, the region is seeking opportunities to move up the value chain, from merely exporting raw materials to becoming more integrated in the manufacturing process. This shift could be a game changer for Latin America, allowing the region to generate more value, create jobs, and develop cutting-edge industries. However, these changes also raise important questions about environmental sustainability, the local impact of mining operations, and the long-term implications of relying heavily on Chinese investment. As we look to the future, it is critical that we understand and consider how Latin America can balance its economic opportunities with the need to protect its natural resources and ensure that local communities benefit from this growth. To delve into the changing nature of Chinese investment in the region and to parse the realities between the many Chinese announcements, investments, and actual operations within the EV supply chain, we are joined this morning by a star-studded panel. I'm going to pass the baton now to my colleague and my co-moderator for this event, Dr. Ilaria Masoko, who is the Senior Fellow at the Trustee Chair in the Chinese Business and Economics Program at CSIS, to introduce this star-studded panel.
Thank you so much, Ryan. And let me say it was such a pleasure to collaborate with you and your program on also a paper on this topic, which we just published yesterday. So I also encourage people to take a look at that. And today, as you said, we have a star-studded panel. We have Henry Sanderson, Gregor Sebastian, and Christine Murray. Let me briefly introduce each one of them. Henry Sanderson is the executive editor of Benchmark Mineral Intelligence and an associate fellow at the RUSI think tank in London. He is also a former journalist for the Financial Times and Bloomberg in China, and he's an author of what is one of the best books for understanding sort of the geopolitical dynamics behind the energy transition, Volt Rush, the winners and losers and the race to go green. We also have joining us today from Berlin, I believe, Gregor Sebastian, a senior analyst with the Rhodium Group's China Corporate Advisory Team. Before joining Rhodium Group, Gregor was an analyst in the economy research team at the Mercator Institute for China Studies, MERIX, in Berlin, and also a co-author of mine for an excellent report that we published last year on Chinese EV companies' sort of international expansion. And finally, we have Christine Murray, who is the Financial Times Mexico and Central America correspondent, I believe joining us from Mexico, actually. And prior to joining the FT, she spent almost 10 years at Reuters and Thomson Reuters Foundation in London, New York, and Mexico City. So we're really lucky to have such experts that can speak to these trends from different perspectives. And let's start with Henry. Who is, Henry, you're such an expert on sort of the mining sector and Chinese companies' involvement in this sector. How do you see the recent developments, changes? How does Latin America fit into broader global trends? Give us a better sense of your perspective on this.
Yeah, thanks so much for the kind introduction and for having me today. So Latin America is a key part of the battery supply chain, the global battery supply chain that's supplying electric vehicles and also critically energy storage to make sure that renewable energy can be integrated with grids. And we've really seen significant investment across Latin America in minerals such as lithium. But I do want to state that China, while it's been a big investor, is not dominant, and they've also suffered some setbacks in Mexico and Chile that we can talk about later. But if you look at the roughly, I think there's 104 projects and operations in Latin America. This is lithium operations. 22 of them have some Chinese participation. So on a attributable basis, so production multiplied by percent ownership, it's around 15% of total production. This will actually drop to 13% in 2025. Because of what's happening in Chile, where a Chinese company owns a stake in SQM, the largest lithium producer, but the government is nationalizing that company. So it's by no means totally dominant. And the interesting thing is in Brazil, where we've seen a lot of recent investment, most of the investment in the lithium mining is non-Chinese. And we saw a big deal this summer with Australia's Pilbara Minerals buying a Brazilian project. But one of the big questions, as you mentioned in the intro, is can Latin America move up the value chain? Because even though that Brazilian lithium, a lot of the investors are non-Chinese, it obviously gets sent to China to be processed or to be made into batteries. So that's really the critical question for the region. And I think it will really depend on a couple of things. One is incentives, making it worthwhile to invest in processing or cathode, so-called midstream in Latin America, but also expanding the domestic market. So once you have demand, then supply will follow. And I do think Brazil is a really interesting case study in this example, because it's got potentially a huge EV market. And because the costs have been too high, potentially if the cost can be lowered, if Chinese companies can sell cheaper Chinese EVs and build them in Brazil, we could see that demand emerging. And as a result, we could see other bits of the supply chain coming into Brazil. The other way of thinking about it is to use the renewable resources, such as Brazil has hydropower. In the mining state, over 90% is hydropower. So that's attractive. Do you want to do some of that processing of lithium there rather than in China? And that's one route that's being looked at as well. So I think for me, that's the critical question, but I don't think it's going to be easy, because unless you develop the rest of the supply chain, there's no point to build a cathode in Latin America. You're just shipping it to China anyway. So unless you can really incentivize it or develop the domestic market. And this, just my final point, this is the situation we're in. If you look at the global EV market outside China right now, is demand is really in a tricky situation. There's a lot of uncertainty around demand, and governments have cut subsidies in Europe, for instance. So you can't really invest and incentivize supply, manufacturing, etc., if you don't have certainty about demand. So that's also key for big markets such as Brazil. Thanks so much.
Apologies. If you don't have an issue with the mute button, then it's not a Zoom call. Thank you so much. That is so interesting. And I think that fits in perfectly with some of the research I've been doing on how Chinese companies are actually targeting the developing world, but there's still a lot of questions over, how demand can expand and, the various sort of maybe local tools that need to be deployed to actually boost demand for electric vehicles. But I think that piece is really important to remember, that this is an industry that develops also based on local demand for the final product, which is ultimately EVs or other applications for batteries. And I think that is a perfect segue to Gregor, who has been looking at the downstream investments and development in the assembly and manufacturing of this industry, and has been taking sort of a global look. So Gregor, can you give us a sense of how the Latin America fits into the broader global trends, and how Chinese companies are positioning themselves in this sector?
Thanks, Ilaria, and also thanks to Ryan, Ruby, and the rest of the CSIS team for having me here today. I think you guys wrote a fantastic paper on a very timely topic, and I'm very glad to be here. To connect that to your question, I think just 2 sentences on the context. As Henry already alluded to, right, the global EV market is currently in a slump. The one exception here being China, where we currently still see that EV sales, especially in the plug-in hybrid segment, are doing very well. And we actually are reaching records basically every month. That means that currently roughly 2/3 of newly sold battery electric vehicles and plug-in hybrids are sold in China. But increasingly, there's also some initial hurdles, right? There's a price war going on in China that's really putting OEMs, car makers under pressure to look for new revenue streams and especially profits. We also have all of this taking place under a stagnating passenger vehicle market more generally, right? So while there's been a surge in EV adoption, China's passenger vehicle market is actually not doing all that well, right? And we haven't recovered from a peak more than 5 years ago. This has led car makers, including foreign ones like Tesla, but also BMW, to start using this ecosystem that exists in China for exporting to the rest of the world. And this is really a story that really gained traction in 2022, continued into 2023. But looking at the more recent data over the last 12 months, we're actually seeing stagnating exports. And this is related to logistical challenges, it's related to the weak demand that we're seeing, but it's also related to tariffs and other barriers to market access and market entry that Chinese car makers or other China-based car makers are now encountering. And Latin America is actually fitting into that picture, right? So we obviously have the big advanced economies, Canada and the US, and also the European Union, although there's still very much a debate ongoing about what's actually going to happen here, erecting barriers. But we also have emerging economies like Turkey or Brazil that are increasing tariffs. And this is now serving as an incentive for Chinese car makers to set up manufacturing plants overseas and directly supply these markets locally. And in the case of Brazil and Mexico, they could even be used as smaller hubs for exports into the region. And I think this is also mentioned in your report. You know, there's initial investments, especially in Brazil, and obviously a lot of rumors and a lot of interest from policymakers, but so far very few confirmed investments also in Mexico when you look at this picture. And once again, to put this in the broader context, this is really a fundamental change of Chinese outbound investment that we've seen both globally, but also in the region. Because so far, Chinese outbound investment has been very much focused on acquisitions, in Latin America, mainly in the energy and mining field. And now this is really the first wave of major outbound investment, that is greenfield investment or brownfield investment, where you acquire a plant and then retool it, which could really drive up, value added, could bring employment to these regions, and most importantly, perhaps also for car makers that are currently present in these markets, also increase competition, right? And this is also where we should look at some of the challenges that I think Chinese car makers will face in the coming months and years. First of all, looking at the financials of the car makers, right? They're under severe financial constraints, and some car makers like BYD that have already announced 4 or 5 investments just this year probably won't have that much more spending power to add another 2 or 3 additional plants going in the future. Additionally, there is also the aspect that Latin America is obviously in competition for Chinese EV investment with other regions, right? Especially with Europe and Southeast Asia. So some investments might also be diverted there if EV adoption is lagging behind in Latin America. And finally, I think there are these competing interests at play. The Chinese government is really pushing car makers to only bring minimal value added overseas, so that actually the Chinese economy can still benefit from producing components, from producing batteries, and basically keep value added at home. On the other hand, host governments like Mexico and Brazil are obviously interested in maximizing the local value added. So this is bringing benefits to their economies. And throwing into the mix, obviously, especially in the northern part of the region, we have these dynamics where you obviously have another regional superpower that also has a stake in the investments of Chinese EV investments. And maybe this is my kind of turnover to Christine via Ilaria.
Great. Well, thank you. Yeah, that is a perfect segue. Christine, you are our eyes, and you've been on the ground. You've been doing a lot of reporting on this. What is your perspective? And perhaps also, I think we've been talking a lot about sort of Chinese companies, but what is also, the Latin American response to all this?
Yeah, thanks, Ilaria, Ryan, and CSIS for having me. So China's presence in Mexico has long been overlooked or considered small, relatively unimportant relative to the US or parts of Europe. But now suddenly it's a key issue in the US presidential campaign, and with the upcoming USMCA North American Free Trade Agreement treaty review in 2026, everybody here knows this is going to be a central issue. So what's happening? What's the reality of what Chinese companies are doing here? They've been gaining a foothold for decades, and you can see in the shipping data that there are growing numbers of containers arriving from China, particularly in Mexico's Pacific ports. And that's happening as Mexico became the US's #1 trading partner last year. So there is growing scrutiny, as I mentioned, of the investment here, and some people are starting to see Mexico as a potential backdoor into the US market. And really the focus here is on the auto sector. So for context, it's a very important sector for Mexico's economy. It provides 1 million direct jobs and is the highest value export sector. So politicians and workers here know that this sector is crucially important. And in autos, there's a few different things happening. One is on the retail side. So there's been a surge of imports of Chinese-made cars, both by Chinese brands and by US and European brands that import from China. And now 1 in 5 new cars sold in Mexico were made in China. And that has just happened over the last 5 years. But the number of EVs sold is still very small. And on production, there's actually just one Chinese company assembling cars in Mexico. Some say it's not even producing, it's assembling in Mexico. So, and for putting it into context, of those roughly 4 million cars a year that Mexico makes, this one plant assembles about 20,000 vehicles. So the focus has also been on auto parts and the increase in imports of auto parts from China, which is happening, but the US is still dominant in terms of the sourcing in the auto sector. So, the question is where the trend is going. And given that in a couple of these cases, the growth has been quite recent and quick, people are starting to pay more attention to this and asking, is it desirable or even possible to reduce reliance on China when it's integrated into the supply chain? And this is also happening at an interesting political moment. So in October, the president-elect Claudia Sheinbaum takes office, and there will be very close scrutiny of her stance towards China. So far, when she's been asked about it, she's been cautious and said, North America's fundamental, we're open to investment from elsewhere. But over the coming months, particularly weeks in the with the US presidential election, there will be very close scrutiny of what Mexico does here.
Great. Thank you so much, Christine. I think, Ryan, would you like to start off with a round of questions?
Thanks very much, Ilaria, and thanks to our panelists for those opening remarks. I want to go to Henry in particular on a minerals related question, because something that came up in your remarks was clearly about even the possibility that we could remove or get more either local or US participation in some of the extraction elements of the mineral supply chain in Latin America. You're still sending some of that product, or much of it, back to mainland China for refining. And so you haven't really done that much, was basically one of your comments. And so I do want to ask you about the hot topic of discussion in the US, which is, of course, all of the industrial policy that we've put in place, particularly to try to cut into some of China's advantage in things like refining and smelting. And so let's talk for a second about the Inflation Reduction Act, the IRA, other US policies that have been put in place that have incentives there for critical minerals in the value chain. Are these things working from your perspective? And if not, what more can be done? Are there any tweaks that we could possibly make to the IRA and other pieces of industrial policy that the US has put in place to actually have the intended effect?
Yeah, thanks, Ryan. It's a really good question. So the IRA obviously has had a huge impact on these supply chains, but I think some of the issues with it are the provisions are perhaps too restrictive, too strict. So, for example, the free trade agreement provisions, basically only Chile, in terms of lithium, is eligible in that respect. And at the same time as the IRA came out was when Chile started to move to nationalize its sector. So we haven't seen as much investment in Chile as perhaps potentially there is. I mean, now they're opening it up to new investors, and we have seen a lot of interest. But the second thing is the provisions on foreign entity of concern, for example, where Chinese companies are in effect banned from being part of these supply chains. I think that's is really restrictive. If you look at new lithium projects, another one that opened in Argentina this year is between the French company Eramet and Chinese, the world's biggest steel company, Tsingshan. And there's a joint venture. Tsingshan's 49%, I think. Eramet's just the majority. But there again, that's a really good coming together of East and West, or using each other's expertise, and that would presumably, Ilaria, I don't know, correct me if I'm wrong, but presumably wouldn't be eligible, for the IRA. So I think the IRA has been great, but that's been the issue, that they've been very restrictive on those points. I mean, I think Argentina obviously would make sense if they can come to an agreement like an FTA light, or include it in to be eligible. That would make perfect sense, because you've got if you look at the existing big lithium producers in Argentina, Arcadium Lithium, which was Livent, is a big Western company. So there's lots of opportunity. And as I said earlier, it's not like all the investment has been Chinese. It's a lot of non-Chinese investment as well. On your point about refining, so Brazil, as I said, has the hydropower. People are looking at building processing there, but you have operations like Tesla's building a lithium refinery in the US, right? So material can go up there. And this week I was in Germany. AMG Lithium, which mines in Brazil, opened a lithium hydroxide processing plant in Germany this week, which I attended. And eventually they'll send the material from Brazil to Germany and probably process it in Brazil first before they do that, because of the hydropower. So these supply chains can change, but it's going to take a lot of investment and work. And I'm not sure the IRA is, supercharging that in the way that potentially it could.
Thanks very much, Henry. One more thing that we've also heard from some is that China's long-term offtake agreements are really, really difficult to compete with when you have guaranteed offtake for 10, 15, sometimes 20 years. That's another impediment, I would say, to the IRA. Ilaria?
Yeah, actually, I had sort of a follow-up, but I think that Christine and Gregor may also have thoughts on. And that's sort of, one thing that emerged from the research we did that I thought was interesting is that local policies really matter, right? Chile's policies on lithium, may have a huge impact. Mexico, obviously, what the Sheinbaum administration will do on natural resources could have a really big impact, as well as what they do on, Chinese investment. And also, as I think, as Gregor mentioned, right, there's this push and pull of China, the Chinese government certainly wants to keep sort of strategic technologies, or at least the more strategic part of the technologies in China. But governments around the world of these developing countries, and including especially maybe these countries in Latin America, they really want to move up the value chain, and they do want to get more of that technology in their own country. So I wonder if I don't know what the exact question is here, but would you agree with me? How do you see this as sort of a future area where we'll see even more activism on the part of some governments that have sort of a strategic vision on this? And I don't know. Yeah, Christine, go ahead.
Talk a bit about Mexico. So obviously you have a dominant party in Mexico with a nationalist view of the sector and natural resources generally. And that's a theme that runs through several countries in the region. But here, Morena, the ruling party, is so clearly dominant that view is probably here to stay for the coming years. And lithium resources were nationalized, and it looks like for now, private exploration is of the cards. We'll see what Sheinbaum does with this company, Litio MX, that's been created. But the President López Obrador didn't grant new mining concessions. There's a pending reform to ban all open pit mining, which gives you a sense of the political atmosphere around the sector. And having said that, it'll be interesting to see whether there are some, shared models they can develop with the public sector. But my impression, and I'll leave it to the mining experts here, but is that there was never great excitement about Mexico's lithium reserves anyway, and they require newer, more complex, expensive technologies to get it out the ground. So I'd love to hear what Gregor and Henry have to say about that.
Yeah, I mean, to add to that, and Larry, I fully agree with you. I think there has been this movement across several countries and several regions as well to basically look at what Indonesia has done, for better or worse, and try to emulate that and ideally also improve upon that process, right? Indonesia had this policy where it had large nickel reserves, but wanted to move up the value chain, didn't just want to be a raw material exporter. So basically erected barriers and then invited Chinese investors, but also other investors increasingly in to refine the material locally. Obviously huge downsides also for the environment there, because that coincided with building lots of coal power plants, and there were recent incidents of work accidents. So there's a lot of downsides to this model, but I think it still has resonated in the in a lot of emerging economies, that this is something that you can do if you do it correctly, and if you have this sort of leverage, either through your market size or through the presence of raw materials, that you can use this to basically lure in a foreign investor and basically force them to increase their value added. I think this is something, for instance, that Chile is trying to do, right? And some other countries in the region as well. Once again, maybe for me, the point about EV manufacturing, Brazil, I think, has a similar strategy. I think they're a little bit more light touch at the moment. I don't think they have like hard local content requirements in place. However, they're trying to establish themselves as a export hub, right? And if you want to export to other Mercosur countries, you need to basically be a Brazilian product, and that requires a certain amount of local content. But once again, right, there is this current gap in the supply chain where I think Henry mentioned this before. There's lithium reserves, but then the next two steps are basically missing at the moment, right? The kind of refining part, and then also the battery cell production, right? At the moment, we don't have any battery cell production in the region. That basically would need to come from China, and then the product is coming back to Brazil and is then manufactured into an EV, right? And I'm sure there's a desire by the government to accelerate that. On the other hand, Brazil is not fully committed to EVs in general, right? There's a strong push to have ethanol fueled vehicles, right? So I think they have this more light touch approach to the sector in general, which, in the moment, I think is working for them, right? Because there is a lack of kind of openness in other regions. But, if Europe is kind of fully committing to, we're doing EVs, that could absorb more Chinese investment in the future, which at the moment is, I think, delaying investment decisions in Europe for that reason. So I think it's a really important question. But yes, Ilaria, I think the local policies matter definitely.
And Henry, I don't know if you wanted to add anything to that. And I would say, maybe something also to keep in mind that emerged earlier is, Chinese companies often have the technology, right? And so they're seen as one of the keys to actually achieving that move up the value added.
Yeah, I would say, sort of moving up the value chain, I think is super hard. And I think Chile for years now has offered this deal where they'll give cheaper lithium if you come build cathode, which is, the next step in Chile, but it hasn't really got off the ground. And I think in your report, you mentioned the recent news by BYD sort of saying they're delaying it. And I think they said, like I said earlier, like we need to see what kind of deal we're going to get, make it worthwhile for us to do that. So I think it's a super hard policy to enact. I mean, we've seen Indonesia do it very successfully, but I think it is hard to do, and even more so now in this global market where, as I said, we're facing demand uncertainty, but also low lithium prices, really squeezed margins for cathode production. So it's a really hard time for those other sectors of the supply chain. But I think, yes, if it's going to work, localizing it in the supply chain, it has to fit into the North America supply chain. And that is potentially the way it could work, or it will fit into supplying BYD in Brazil, local production in Brazil. But I think if you're going to localize cathode in one step, you want to do the rest of it. You don't really want to be shipping stuff back to China. And I think that's what we see happening in Europe, in Hungary, Poland, etc., sort of supply chain being built out. But I think you need the rest of those steps to happen. Perhaps it could go to the US, as I said. But I really think, there are advantages that these countries have. As I said, the hydropower in Brazil, I think that is a huge advantage if it can be used in some of these very energy intense steps. But you do need the policy to support it. And I think that's, it's a very hard business to go into cathode. It's a very competitive business, very low margin business. So it's a difficult one when if your costs are going to be higher, how are you going to offset that increased cost? And every automaker at the moment now is looking at cutting costs and in some cases trying to survive. So it's not easy business.
Thank you to all of our panelists. It was a great round of questions. One of the questions that we tried to answer in this research, in this body of research, is a somewhat provocative one, which is, to what extent could China be described as building a vertically integrated supply chain for electric vehicles in Latin America and the Caribbean, in all four of the segments that we looked at? And the conclusion in the paper at which we arrived is that right now there's not really anything that looks like a strategy to build a vertically integrated supply chain where there's a lot in each of the segments. Right now, different companies are working on different elements of the supply chain in different countries with different sets of regulation. It doesn't look like it's kind of a whole of region, say, operation or strategy. But one thing that we did come across, however, in our research is a few different Chinese companies coming up again and again. And so BYD and CATL seem to come up time and again in both the number of countries in which they are present, but also, I would say, in the scale of some of their operations in various segments of the supply chain. And so perhaps this question is best directed at Gregor, but I wanted to ask whether BYD and CATL, in your opinion, have a special kind of role because of their involvement in all of these different segments of the value chain and in different countries.
Yeah, thanks, Ryan. That's a great question. I mean, and going back maybe to the first part of your observation there about not all parts of the supply chain being invested in Latin America, I think that's really critical. And it's interesting to see as well, because that differs to a certain degree from what we're seeing in Europe, right? Where we see a lot more kind of investment in the battery cell manufacturing, also more in the cathode space. And then obviously no mining, right? Because there's fewer resources and the permitting and licensing is harder. So that's obviously interesting. I think that kind of boils down again to the question of a demand, right? Car makers are unsure of the long-term perspective of the investment. And compared to an EV manufacturing assembly plant, which you can usually build looking at the investments between 500 and maybe 1.5 billion US dollars. A gigafactory for batteries is going to be a lot more expensive. So I think this is actually part of the reason why we're seeing few of those investments. It's a lot more capital intensive to build battery cells compared to actually the final EV assembly in the first place. Another reason, and this is something that we encounter with Chinese investments, but also South Korean investments in Europe, is the worry about kind of environmental damage, right? Which you don't have associated with kind of OEMs building car plants as much, but you do have when you look at the battery investments itself. In terms of the two companies you mentioned, I mean, partly it is also just a question of their scale, right? I mean, these two players are by far the biggest and most well-known Chinese companies in that segment, right? And also compared to the more upstream players like Tsingshan, like Huayu Cobalt, they have usually slightly higher profits, right? I did say that obviously BYD is embroiled in this price war domestically in China, but it's also driving that price war because it can, right? Compared to actually some of the joint ventures that are also competing in China, BYD has more room to maneuver here still. So I think that really matters. And I think Henry also mentioned, cathode production is really low margin, right? In comparison, in the battery cell business, you do usually have slightly higher margins, allowing you to then reinvest in the region. But it's really interesting to see, I think, BYD's investment strategy, and this is not specific to Latin America, but really something that at least I'm observing currently is you go in and invest in an EV assembly plant, often actually before you've even tested demand locally, right? In Brazil, for instance, they were investing and announcing their investment first. The export followed later, right? This is a really interesting move and usually is counterintuitive to what you would expect perhaps from a traditional car maker that, wants to test if the market can, accept perhaps 50,000 units per year, and then I'm investing. And then they're really focused on this downstream element of we want to do the car assembly first and still import the battery from China. And I think that points again to this capital intensity step, that batteries are usually more expensive to produce. There's more local concerns. And increasingly, we see the first signals now coming from China. There's also this concern from the government that, this is really the key of where China sees its competitive advantage, right? Lithium iron phosphate batteries, because at the moment, there's very few international companies that could compete with Chinese battery makers in that segment. So I think that's maybe another reason why we might actually never see some of these investments come through if the Chinese government says, you know what, we don't want to lose our tech advantage in this space.
Thanks, Gregor. That's great. And notably, the investment you talked about, BYD in Brazil, took place very quickly, as you mentioned, without really testing the local market. And importantly for BYD, scoring a public relations victory in an old Ford factory in Bahia, Salvador.
Just Ryan, just on that investment, I mean, to the point of localizing, I mean, Brazil's has launched EV tariffs, right? And they go up to, is it 36%, 35% by 2026? So that is an example of policy attracting investment, right, into the market.
Yeah, and
that's terrific.
Actually, oh, sorry. Go ahead.
Oh,
I was actually going to say, following up on that, I do have like a follow-up question. And I was going to say, I mean, Brazil is actually quite interesting because nobody thought this was going to be a big EV market in the short term. And yet in 1 year, they've gone up from less than 1% of sales being EVs to 5%. Right. And I know some people in Brazil are referring to it as the BYD effect. But I think it raises this interesting question of, data that I've been looking internationally where Chinese companies are really doubling down on developing countries, and maybe better Chinese companies BYD, right? And I think we should keep in mind, I think what Gregor said, like the size of BYD. I mean, even within the Chinese market, they're just so dominant in terms of sales, right? Something between 30 to 40% of EV sales are BYD, and the next up is Tesla with something to 6 to 7%, right? I don't know if I have the latest data, but it's something along those lines. And but we've seen this interest in developing markets that I would say many analysts, myself included, a few years ago thought were going to be much slower in their uptake of EVs. And so that gets to the broad question of what is the latent demand? What is the potential demand in Latin America for EVs? Which I feel like this has been underlying a lot of our conversation, where if you want more industry, you really need more demand for the end product. Well, what is the potential demand? And I don't know, Christine, if you have a sense of this, or Gregor or Henry.
I mean, just to add a contrast to the BYD in Brazil example, there's been a lot of noise about BYD investing in Mexico, and it hasn't happened, right? And it's interesting that at the same time, you had Tesla announcing a big plant that also hasn't been built. So, the Chinese companies making EVs aren't exempt from the broader political environment, and the politics around investing in Mexico has changed completely since President Trump won in 2016, right? I mean, in the days after the election, I went and saw, after the Ford plant was cancelled in 2016 in Mexico, they were going to build a massive new plant in San Luis, and they just didn't build it. And I watched the workers walking off the site in the days afterwards. The Chinese EV manufacturers have clearly been looking in Mexico and have been talking to local and federal officials, but they haven't jumped into an investment. And, Mexico's challenge, full stop, is transitioning the sector to EVs. And I will get back to your question at the end, but many of the US car makers here are reconverting their plants to make electric vehicles, but big new players have not arrived. And they're clearly shopping around in different countries for different incentives. And here, they haven't gotten the deals that are enough for them to actually invest. So I would imagine that in terms of EV demand in Mexico, all of that is having an impact, because Mexico hasn't been able to develop an EV supply chain yet. It hasn't attracted one of the big makers, and it doesn't have a developed supply chain and auto parts for EVs yet. So hard to say what the potential demand is in Mexico, but given the sort of struggles that the sector's had so far, it doesn't look like something. It doesn't have a BYD effect like Brazil does.
Right, and I don't know that we know that that's a long-term effect, right? And I think ultimately you do need governments actually stepping in to provide more direct incentives for consumers to purchase EVs one way or another. I mean, I think that's what we've seen globally after a certain threshold.
And just a small point on that, what the next administration does in terms of energy policy is going to be crucial for future demand, to build a factory here and to buy an EV too. So it will be interesting to see what they prioritize and what kinds of incentives or they offer for those kinds of investments.
Yeah, and of course, the incoming president has championed electric mobility in Mexico City when she was the mayor. So we don't know if that would translate to a national policy, of course, the dynamics and incentives being very different.
Yeah, that's right. And, the necessary investment in Mexico's grid is huge, tens of billions of dollars needed. It's not easy to fix even in 6 years. So she's got a big challenge in terms of, companies in the last few years have been asked to contribute large amounts of money to get connected to the grid. Permits have been slowed or stopped. So it'll be there's a lot of people watching those first few months to see what happens with electricity permits and, incentives offered for investment.
Thank you. Brian, do you have other questions? Or no, sorry. Go ahead.
No, sorry. I would have just added my 2 cents because you asked about the EV demand. I mean, I think one of the tricky things is obviously that passenger vehicle demand and sales in the region haven't really grown recently, right? It's a stagnating market and has been for several years, which obviously is a constraint. And I think if you're planning to invest in the region, that obviously is a major headwind, right? And probably makes you think twice to set up a massive plant, right? Compare that maybe to a market like India, I think, where there's perhaps a much more hopeful promise, at least, that the market is going to increase in overall size. That means as well, though, that any EV sale in the region basically will take a sale of an ICE vehicle away from it, right? So, and I think this is just going to intensify competition with the incumbent car makers a lot more. And I think it's also partly behind this Brazilian imposition of duties, not just on Chinese EVs, but on all EVs, right? Because there is an existing car industry, and obviously companies there are worried about that competition coming in. But yeah, if you want to look at the EV demand, obviously it's a very varied picture, and Chile, I think, has relatively ambitious targets. But the main markets, obviously Mexico and Brazil, are still open question marks and probably not the most ambitious in their current legislation when it comes to EV rollout, and that is obviously a huge drawback. And I think, Ilaria, we might have touched upon that in our report last year. The big question is whether the sheer presence of a BYD is enough to basically bring the market over, even if there's not many incentives there, right? And I think in your report, you touch upon something really interesting as well, are these investments in electricity grids, right? And I think so far, I haven't seen that much action in terms of like converting that sort of knowledge and perhaps also power into, improving the charging infrastructure, but obviously that could be something, right? Domestically in China, State Grid is, I think, among the top 3 installers of charging piles, and they have big stakes in Brazil, and I think in Peru is the other country, right? So that obviously could, mean something going forward as well.
Yeah, absolutely. I mean, I think it's worth remembering that China just has this wealth of experience with EVs, right? That just so many EVs and charging stations, it's all happening in China. So it's also, a sort of knowledge advantage. Ryan, I'll pass it on to you.
Thanks very much, Ilaria. We've been talking a lot about Chinese investment in the region. Of course, that was the crux of our research report together. But I do want to talk about what the U.S. reaction to these sets of trends might be, right? If we can talk a little bit on the U.S. side of the ledger, I think that would be important as well. And this question could go to all 3 of our panelists. It's basically to ask them to speculate, knowing what we know about China's investments in these various segments of the EV supply chain within Latin America and the Caribbean, and knowing the amount of concern, directed policy, discussion in the U.S. about so-called nearshoring or friendshoring, the general idea that capital now has value and values political alignment with the United States and so on. How might China's investment in the region impact some of these strategies that the U.S. has put in place to try to attract more supply chain reorientation and relocation from places like East Asia to the Americas, once the U.S. kind of takes into account the investments in the various segments that we've outlined in the report in the EV industry? This is for all 3 panelists, if anyone wants to answer.
I think what's quite interesting is we've seen some small but investments by US Exim Bank in cobalt in Chile, and also the IFC lending money to lithium in Argentina. And I think the US is also backed a Brazilian rare earth project. I think the Exim Bank has expressed interest in providing money. So we do see some of this money obviously making its way to Latin America in these projects, which is really, really interesting. Again, though, to my earlier point, could that money just actually be funding minerals that will go to China? I mean, this is the fundamental problem with the political project of trying to de-risk from China and create these supply chains. Unless you have every step, are you just funding mineral supply that will go to China? You've got to create the rest of the supply chain in North America. And the problem is, as Gregor said, is automakers in the US now are slowing things, right, rolling back a bit. And we've seen this incredible rise in plug-in hybrids as well. So, although that's mainly China, but I think that's the issue really with the how to combat China and Latin America, because China's investments make a lot of sense because they can supply the home market and then they can export those EVs to the world. So yeah, it's good to see money like this coming into critical minerals, but the rest of the supply chain, I think you need to make sure that funding is going to come through. And my worry is that the US election, a lot of rest of those projects are being delayed, or people are waiting to see, right, to see what happens.
Thanks, Henry. Gregor, Christine, either one of you want to comment?
Yes. I mean, there's clearly, a push to try to bring investors involved in activities in the EV supply chain to Mexico to try to get them to invest. The US ambassador has been involved in some of those efforts, but so far it hasn't worked. So there isn't a significant EV supply chain developing, and that is a huge challenge for Sheinbaum if she decides that she wants to push electromobility here. And in the coming years, Mexican policymakers understand that they need to have something to offer on China, because this USMCA review that's coming up and is already underway really. US lawmakers are pointing the finger at Mexico and saying, what's China doing in Mexico? And what you hear from the Mexican business community is, you're more reliant on China than we are. But it's understood here that there's going to be a lot of political pressure on Mexico to be doing something, or at least appear to be doing something about this. So, last year there was Mexico signed a memorandum with the US to do national security reviews of investments in Mexico. That was clearly related to China, and I think in the coming months, people are expecting there'll be more of those kinds of statements and attempts to try to clarify what exactly Mexico will allow and won't allow in terms of Chinese investment.
I would note as well, Christine, that the US and Mexico together put tariffs on a number of Chinese products that the US sort of helped Mexico identify, and then Mexico applied some of those tariffs to present a common tariff wall, if you will.
Yeah, and it's notable that the EV tariffs that the US and Canada have put in place haven't been put in place in Mexico yet. So that's something to watch as well.
Ilaria?
No, I saw Gregor. Did you want to add anything?
Just very quickly. I think the tariff question is, a big one, right? I mean, looking at a range of products, I think it's both in terms of, the US is investing a lot of resources in actually doing the data gathering, but then also it's about building a narrative, right? And this is not necessarily only geared at Latin America or South America. It's a global effort, right? To kind of show that subsidized Chinese exports can harm your economy, even if you're an emerging player, right? They can harm. So I think this is one thing that's happening. Another thing, obviously, is what we're seeing now is this push to focus on the next thing on the EV side, which is connected vehicles, right? And I think the US is already convening partners, and Mexico is definitely going to be probably part of these discussions of saying, you know what, we have concerns, and I think you should also take them seriously, right? I think so. This is obviously the kind of next battleground. We've seen that a couple of years ago with the 5G question, and different countries have taken very divergent responses here. And I would expect this in this question as well. But obviously, the US administration is trying to take a more proactive approach now, so that this rip and replace that had to take place in some countries can be avoided now, right? So kind of tackling this issue head on. And I think the response in Latin America will heavily depend, right? It will depend on the size of your country and economy. It will depend on, are you part of the USMCA? Are you not part of the USMCA? Are you governed by Lula? So I think there's loads of different factors, and I think we shouldn't expect a uniform response, right? Mexico will be under a lot more pressure than Brazil will be, right? So in general, I think we should continue to expect that the region is going to react differently in general to Chinese investment and also to US pressure.
Thank you. I think this is great. I think we've got a few questions from the public. I think one had to do with Mexico specifically, electricity infrastructure, supporting local EV demand, which we sort of touched on but I don't know if Christine wants to add more. And then there was another question on sort of medium heavy duty vehicles rather than light vehicles. And I would note that BYD is also a global leader in electric buses. I think Chile or Santiago, I think is one of the city of Santiago has many electric buses built by BYD, and Brazil has a BYD bus factory. Of course, California also has a BYD electric bus factory. But I don't know if any of our speakers want to add any comments on these questions.
I think what's interesting is what can we offer Latin America and China. When it comes to clean energy more broadly, it can offer a lot, right? And I think if you look at like energy storage, right? I think BYD is providing batteries for the biggest energy storage project in the world in Chile, in the Atacama Desert. And China produces 99% of lithium iron phosphate batteries. So the cheapest lithium ion batteries, we're not going to have an energy transition without those batteries. I mean, people don't realize the level of dominance China has, right? So they can offer these things and localize some part of that supply chain, and the same for cheaper EVs, right, which is the kind that a lot of these markets need. So I think in many ways China can offer a lot of things that these countries need. So I think that's and solar as well, right? So I think China is very dominant in solar, as we all know. So a lot of these things that fit into the broader energy puzzle, Chinese companies can offer.
Thank you. That's very true, and I think very important to keep in mind. Christine, Gregor, do you have any last thoughts? We're about at we have a couple more minutes before we're out of time.
I mean, I'd just say on EV charging networks, I mean, there's still not a very developed EV charging network in Mexico. So, for that to change, there would need to be some kind of coordinated effort to change it. So again, it comes back to what the new president and the new government will prioritize and how they will go about it in terms of supporting local EV demand in Mexico.
Thank you. Gregor, closing thoughts?
I mean, I don't want to touch upon the heavy vehicle question because I know that you've spent so much time looking at that, Ilaria. So you should probably take that. But yeah, I mean, it's similar to what we've seen also in Hungary, right, where BYD has also been building buses, and obviously that's a good segue for a company to already have some market experience. We've also seen it in the US, right, where obviously BYD then encountered some more difficulties with producing and selling buses for public transport networks there. Yeah, I mean, my closing remarks would otherwise be read the report. It's absolutely fantastic what you've guys put together.
Well, thank you so much, Gregor. For those who are interested, our report is on the CSIS website. It's called Driving Change: How Chinese Investment is Reshaping its Commercial Relations with Latin America, by myself, Ryan, and I should say Ruby Bledsoe did fantastic work on this report. And I would also like to give a shout out to the trustee chair, research associate Ryan Sanderson, who provided a lot of help with this report as well. I think we covered a lot of ground today. I mean, we went in from actually adding nuance to understanding what China's investment in mining in Latin America looks like, to the complexities of the value chains and how these segments are, really differ one from the other, to talking about the role of local, of governments and local governments in the region in attracting investment. The EV markets, companies like BYD that have sort of a global reach and their global strategy. The United States, we didn't even get that much into the connected vehicle rule, but perhaps that's for a different event once we actually get the finalized rules out. And so I really want to thank our fantastic panelists and Ryan Berg, and I would encourage everybody to take a look at our report. And thank you so much. Have a good day.